For Turkish freelancers and modern corporations, revenue is no longer constrained by geography. You can deliver code to a client in Berlin or ship products to a buyer in Tokyo, all from a desk in Istanbul. When income crosses borders without the right documentation, both governments will claim a portion. The state where the client is located taxes the money at the source, and the Turkish government taxes that same revenue once it is received. When two different tax authorities claim the same invoice, the net profit drops significantly. A lucrative foreign contract can end up yielding less take-home pay than a standard local project. For full taxpayers in Turkey, participating in the global market leads to this overlapping tax cost unless an official residency status is established. Turkey has already negotiated bilateral treaties with dozens of nations to address this. These are known as double taxation avoidance agreements, or CEVOA. However, foreign tax authorities do not apply these treaties automatically. To release funds without a local tax deduction, they require formalized proof that you are already paying taxes on that income in Turkey. You provide that proof by obtaining the Vergi-Mukillik Belgesi, or Tax Residency Certificate. This certificate functions as the official credential that allows foreign governments to apply the lower treaty rates to your payments. Obtaining this certificate no longer requires a trip to a physical tax office. The entire application process has been moved online. You access the system by logging into the Interactive Tax Office portal, or e-Devlet, using your standard Turkish ID and password. This decision tree maps the three-tier path to the form. You click İşlem Başlat, navigate to Vergi İşlemleri, and select Mukimlik Belgesi Talebi. The form requires 4 inputs: the target country of income, your business activity, your passport number, and your mailing address. Entering these details is the only requirement to start the official verification of your tax status. Once the digital form is successfully submitted, the system securely logs the request for processing by the government. The Revenue Administration, the Gelir İdaresi Başkanlığı, reviews the digital file and generates the official residency credential. They print the finalized certificate and mail it to the physical address provided in the portal. While the application is completed digitally, foreign tax authorities still require the physical stamped document to finalize the tax exemption. When the physical document arrives, you must present it to the tax authority in the country where your income is being generated. Submitting the certificate applies the CEVO treaty terms to your account, ensuring that the income is taxed only according to the agreement. This certificate is not permanent. To maintain the tax benefits, you must renew the document based on your specific taxpayer status. This timeline shows the different validity periods. For non-resident real persons, or darmukellef, the certificate is valid for 1 year and requires an annual renewal. Corporate institutions have a longer window. Their tax residency status remains valid for 3 years before a new application is required. By following this digital workflow and observing the renewal schedule, Turkish earners can ensure their global revenue is not